Following a request I got on my Telegram channel asking that I should do an analysis on crash 1000 index as well as volatility 10 index, I'll be doing that right away. And remember, you can also drop your request in the comment section of this video, or you can send me messages on Telegram and I would gladly entertain your request. So without wasting much time, let's start with crash 1000 index, and as is customary, I'm on the monthly time frame. So I have the key zones relevant to this analysis, the major key zones mapped out already. So on the monthly time frame, we try to get our major key zones as well as our directional bias. So to get our directional bias, we look closely at the market structure. So merely looking at crash 1000 index, you can see that for a very long time it has been coming downwards, that has been trending downwards. In other words, merely looking at it, we can see that it has been giving us lower lows and lower highs. So the market gave us a low, a lower high, a lower low, lower high, lower low, lower high, a lower low, lower high, gave us equal lows here, but ended up giving us a lower high, a lower low, lower high, equal lows, and then price of the market just pushed upwards. Now, this is vital because this upward push ended up breaking above the most recent lower high. And remember, we say that the market remains in a downtrend until the most recent lower high is taken out, and the market remains in an uptrend until the most recent higher low is taken out. So in this case, we have our lower high and price just busted above this level, giving us a new high. And the interesting thing is that the retracement didn't come back to take out this low or to give us a new low. However, price has also failed to go upwards to give us what? A new high. Now, the reason I'm taking our time to explain this is that we can only say that a market is now in an uptrend if it gives us a series or a consecutive higher high and higher low. So this would be what makes upwards an uptrending market. So when we have a higher high and a higher low, so when we have one high, two highs, then we have one low, two low. So we can say this market is now ready to trend or trending upwards. But in this case, we just have a high. So the market came back. We come to the line graph. We can't consider this a new high. So we have a higher high, a higher low, but the market is still struggling to give us what? A new high for us to confirm that the trend of the market has changed completely. But however, remember we're looking for our directional bias. So what do I do in this instance? Then I can now start looking at where the market is currently at. So the market has given us a new high, there was a retracement, and then for the past 1, 2, 3, 4, 5 months, the direction has been a bit indecisive. And if I zoom in, you can see that we have a dodgy candle. But because this is resting on a major key zone, and in this case, it is resting on a major support zone, we can say for now we'll be favoring buying opportunities as against selling opportunities, even though for the longest of time, this market has been trending downwards. So for us to start getting clearer picture of this particular index, we can now go to the weekly time frame. So on the weekly time frame, there are a few things that quickly jumps out, and it would be for us to, the first would be this big rejection candle at this major resistance. Now this is a major resistance because a major support that has acted as a resistance in time past, because you can see that for several weeks, each time price got here, there was a strong reaction, either pushing downwards or pushing upwards. Now you can see that price gradually came down to this level and there was a big push, upward push price came back and there was another upward push. However, this is a new trading week, and this particular candle that we're seeing here is not very encouraging as to tell us that we would be buying immediately. But what will be taken to favor a bullish directional bias would be the fact that if I place this trend line here, I can easily come to have several touches in the upward direction. So this would be one take for me to decide that I'm going to be looking for buying opportunities. So the second take is this candlestick that I'm seeing here. So this is more like a bullish pin bar, and I'll be taking this as a retracement back into this area. But generally, the market is a bit indecisive in the sense that we have a long leg doji, we had a bearish pin bar, now a bullish pin bar, and a bearish pin bar. So the best thing would now be for us to go to the daily time frame if we will get again a clearer picture. So now on the daily time frame, there are a few things that we can now spot. First, if we go to the line graph, can see that the market gave us a double bottom, which is a major encouragement, because remember, price is resting on a major resistance or a major support area. So for those of us that are still looking for it, so this will be the left leg of the bottom, and this would be what? The right leg of the bottom. But however, to trade a double bottom effectively, we have to, when price gives us this, we'll have this as our double bottom, then we'll have to mark out this as the neckline. So for it not to fail, we'll have to patiently wait for price to take out this neckline. We'll wait for the retracement. The retracement could come back to the neckline or just beneath the neckline. Once we have like a change of trend or character, then we can start pumping in our buying opportunity. So do we have this already here? I don't think so. If we come back to the candlestick graph, we can see that yes, we indeed have our double bottom, but the best course of action would be to wait at this neckline, because we can see that on several occasions, price, or rather in the last instance, price had gotten to this neckline but has failed to take it out. So let me zoom in for us to see. So we have our bottom here. Price created this bottom, pushed upwards, but has failed to take out the neckline. Then if we look at the internal structure that we have here, it would be easy to say, okay, we still have like an internal bullish structure, which means we can easily trade this. Price is here, we can easily look for buying opportunity back to this level. Yeah, that could work, but it would be a bit more risky than if we wait for price to break above this level. Now, the reason I'm saying this is that even though we have a double bottom, this market is still being favored to be trending downwards. Yes, we're at a major support zone, but there's nothing that stops this market from coming downwards to break beneath. So can we buy this particular market? Yes, but our trade would be subjected to a bit more risk as against if we wait patiently for it to break above this neckline, because you can see that this neckline is now acting as a minor resistance area, because for several days, each time price got here, it pushed downwards. When price gets here, it pushes downwards. So let's look at the 4-hour time frame. Now on the 4-hour time frame, this is where a lot of people will be tempted to buy, and which is not which would not be an absurd idea anyway, because if we come to the line graph, we can see that okay, buyers are gradually pushing this upwards. But if you are just going to quickly scalp this, then it might be a welcome idea. But if you are thinking of buying and holding this for the long haul, then I wouldn't advise getting into this trade. The best course of action would be to wait for price to take this level out, then you wait for the retracement. If price cleanly closes above this level, you wait for the retracement, and then you can start pumping in your buying opportunity. So the question would now be, or your buying trade rather. So the question will now be, what do I do in this instance? So personally, I would be waiting for this to see how this plays out, because derivative synthetic indices, they are usually very volatile. So and of course for crash index, it crashes downwards and moves gradually upwards. So there's nothing that stops this index from crashing downwards continuously and breaking beneath this double bottom. So the crash 1000 index, I'll be sitting on my hands and waiting for this neckline to be taken out, and at the retracement, then I would try to buy this particular index. So very quickly, without wasting much time, let's look at volatility 10 index. So for volatility 10 index, the same thing. We're on the monthly time frame. We'll try to draw the relevant key zones to our analysis. But first, also we can also quickly look for our directional bias, and because we can see how this particular index has been trending downwards for a long time, it is very easy for us to also say, okay, the market direction is bearish. So, but again, let's look at the market structure. So price gave us a low, price gave us a lower high, a lower low, lower high, a lower low, lower high, lower low, and then the trend of the market almost changed, in the sense that price gave us equal highs, a higher low, higher high, but ended up breaking below the most recent higher low. Remember, once the higher low is taken out, then there's every tendency that the trend of the market wants to change from an uptrend to a downtrend. So we had a high, but instead of giving us a higher low, it ended up giving us what? A lower low, lower high, lower low, lower high, and then the market just dropped. Even though buyers tried to push it up here, so we could still take this as a lower high, and then price kept pushing downwards. So this means that our directional bias is clearly downwards or bearish. However, most recent, in the last 1, 2, 3, 4, 5 months, from this place, the market started stalling, in the sense that the downward push started stalling a bit. So for 1, 2, 3, 4, 5, 6 months, it almost seemed that like the volatility 10 index was going into a range. So this would be what we will hold on to as our first take. So even if it's wearing for the last 6 months, we can say that for the past 3 months, the direction has been sort of in a range. So we'll go to the weekly time frame to confirm this initial take. So let me zoom in for us to see, and we can see that we weren't far from the truth. So if I bring this downwards, you can see that each time price got to this level, it tended to push upwards, and then I can now take the other level of the range as probably this level. So price has been struggling between this area and this area. So you can see price got here. Every week the price got here, it was pushed downwards, 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 and then at this level it was pushed upwards. And then if we even come closer to tighten the range a bit, we can see that at this level the range becomes even what? Tighter. So the only way to see this clearer would be to go to the daily time frame. Now on the daily time frame, we can see what price has been doing. So let me take this out. So we can see that price was resisted here severally. It played underneath here a bit, and then the market ended up giving us what? A low, a double bottom, tried to push upwards, was resisted here again, and then price came back to this level, which was the bizarre range that we saw on the monthly time frame. So but going to look at what price is doing more recently, or most recently, we'll have to concentrate on this part of the chart. Now the confusing thing about the structure we have here is that price gave us not so long ago a double bottom. I think I analyzed this trade and even took the trade, was hoping the index was ready to push upwards. So this is the double bottom that we had. So normally when you have a downtrending market, once this appears, it's an indication that price is ready to push upwards. But that didn't quite happen, because even though price took out the neckline, let's go back to the line graph, took out this neckline, pushed upwards, price just came back with a stronger momentum, not to retest the neckline, just breezed past the neckline. Because most times when price comes back to this neckline, the momentum is usually slow, such that you know that, okay, the selling momentum is fading. But in this case, price came back with a strong momentum. This is a daily time frame, and you can see ever since that it has continued. However, for a double bottom, the chart pattern remains valid until the bottom is taken out. So in this case, this was what we had. Price broke above, came back with a strong momentum, and price is currently here. So there's every possibility that we might end up with a triple bottom, and then we can still look forward buying opportunities. But in this case, because of the strong momentum with which this price is coming downwards, it is almost unlikely that this level would hold this particular index. Again, back to the question, what do we now do in this instance? So we'll go to the 4-hour time frame. So on the 4-hour time frame, we can see that the selling momentum is still what, very strong. And because this has gone, the price of the market is now very low, it wouldn't make sense to start looking for selling opportunity in this instance. So again, just like in crash 1000 index, my advice would be for us to wait in case anything changes, because you could place your trend line here, and a lot of people will take this as what, as a retest. Now the price of the asset is now at a minor key zone, which is like a minor support. So for, especially for those of us that trade on the much lower time frame, we could as well wait for buyers to come into those markets. So that would be when we start seeing the presence of green candles, because of course this trend line was clearly taken out with a double bottom, with the hope that price was going to move upwards. But price has now come back to retest the bottom, and also making a retest of the trend line. So this automatically becomes a minor key zone. So what I would be doing would be to wait to see if I would be getting the presence of buyers. So once maybe there's a green candlestick here at this level, and doesn't take out this level, because there's another zone underneath. So this whole thing could be used for liquidity. So once I get a green candle here, we can go to the 30 minutes time frame and see if there's a change of trend again, maybe another break of this trend line. So once there's another break of this trend line, and again a retest on those much lower time frame, then we can take our trade upwards. But this would again be a risky take, because now this will be depending on a whole lot, because we'll need buyers to come in strong, take out this neckline, this trend line, make a retest, and then take our buying opportunity. So personally, I would just advise that we'll be patient with this to play out. Jumping in now to sell wouldn't make sense. Neither would jumping in now to buy makes sense, because sellers are still in control of the market. We can't sell because the price is now very low, and we can't buy because sellers are still in control of the market. So these are my little takes for the crash 1000 index, as well as the volatility 10 index. So Evelyn, I hope you see this and take advantage of it and watch it closely. This is Oba FX Trading Academy. We have a small Telegram community that we're trying to enlarge and increase. So if you believe you've gotten anything from this particular analysis, don't forget to like, share, and subscribe. You can also reach out to us via the details on my YouTube channel, as we offer a host of services in our academy. Thank you for stopping by my channel. If you want us to analyze any particular index or forex currency pair, you can drop it in the comments section below. Cheers and enjoy the rest of your trading week.